The 20th Annual Stansberry Research Conference is coming up. I'll be presenting as well as mingling with subscribers at lunches and dinners. The biggest and brightest financial minds will be in Boston for 2 days of ideas and actionable stock recommendations, covering cryptos, big tech, precious metals, real estate, gold, and so much more. These conferences are truly the most unique business mixed with pleasure industry events out there. I'll be there, but will you? In this volatile, confusing market that we're in, you'd be smart to talk to other like-minded investors and hear all the stock picks. Just one successful idea shared on stage can pay for your ticket and then some. And if you're not up for the trip to Boston this year, we've got a discounted live stream option. Same brilliant presentations from the comfort of your own home. Go to McCallStansberryBoston.com for all the details, including the speaker lineup, past conference stock winners, hotel pictures, and how you can get your free $1,000 gift just for signing up. Again, that's McCallStansberryBoston.com. Be sure and register while they still have tickets left. Come find me in Boston and make sure to shake my hand. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's the 23rd of June, 2022. It's a beautiful Thursday up here in Toronto, Canada. And as I mentioned on Tuesday's show, I am up here for Collision, one of the largest tech conferences in the world, about 35,000 people here. The biggest gathering for a conference in Toronto we've seen since the pandemic happened over 2.5 years. So it's great to get out there. I'm a bit tired. You can probably see it. A lot of running around, a lot of great speakers. I'm going to dive into a lot of the great things that I heard so far here in today's show. Also going to talk about the market. We've had a pretty wild market, a lot of Fed speak coming out, and then a couple stocks as well, because some of the ideas that I came across at Collision have some very actionable stock ideas tied to them. So all that and more coming up right now on Making Money. Again, this is Matt McCall. Thanks for joining me. It is June 23rd, 2022, a beautiful Thursday, as I mentioned. I'm up here in Toronto, Canada. So that's, again, why the bit of a different background. But it's been great. And it's quite funny. Canada has gotten a lot of grief because of COVID and things that have gone on the last couple of years. And it is kind of crazy. When I got off the plane, I was in the first row, so I'm about to get off. Like, no, hold on. Only people with connections can go. Then they said only 25 people per every 5 minutes. Thankfully, the flight attendant was very nice, and I was talking to the pilot while I was standing there, and he said, "Go, just go," because even they were frustrated with the craziness that the rules keep changing every day. It's absolutely bananas up here, and that's one thing that's frustrating about Canada. But Toronto's one of the greatest cities in the world. I will say this: this is what made me laugh. Canada. They have a heat advisory out this week for highs of 82 degrees, and people are freaking out. Everywhere I go, people are like, "Wow, it's so hot." And I said, well, that's probably like what it's like in the morning when I wake up in Florida and with more humidity. So boy, oh boy, you guys have the life up here. But it's been a great show. There's been people, I think they said from over 100 countries have showed up for this conference. Pretty amazing. What I've seen, the people I've seen speak, everything from professional athletes to CEOs of companies. The founder of DoorDash was there. I'll talk about that in a minute. Executives from Uber, the head of Binance US. You name it. I mean, tech growth, everything you can imagine under the sun right now that's going on within innovation in this world. There's some representation here at this conference. So I'm going to talk about the markets here in a little bit, but let's just jump into a few things that have gone on at the conference. Then I'm going to talk about the markets. Biden came out this week with the federal gas tax being cut. That's the joke of the day. So I'll talk about that. But, a few things that I found interesting. I've seen a bunch of speakers. I have a ton of notes, but Andy Feng's the co-founder of DoorDash. I saw him speak on Wednesday. He was really good. It seemed a little nervous up there, but he was good. And he talked about how with DoorDash, it was started at Stanford, like a lot of these tech companies were. But it was started because they wanted to improve consumers at restaurants, the way that the experience was. So they went to a lot of restaurants and said, how can we help improve it? And a lot of people talked about, delivery at the time. They can't deliver because number one, they can't afford the people leaving. They need them in the restaurant or a little shop. So they couldn't afford that. Two, if they had like a little delivery service, and that many cities have, it's not viable as far as cost is concerned. So DoorDash, Uber Eats, all these different things, Grubhub came out, and they really changed the landscape. And what I found interesting about that speech wasn't like it blew my mind by any means, but it takes you back picking stocks. When you're investing in stocks, you want to have stocks that have a good or service that is solving some type of problem and making something easier for the business out there. This delivery service, whether it be DoorDash or Uber Eats or Grubhub or any other ones out there, what they were able to do is they were able to take an industry that's been around a long time, serving food, many, 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 many decades, if not centuries, and kind of upend it and add another layer to it. And they added a layer to increase sales for all the restaurants and food suppliers that were involved in this. So that is a business that you want to back. So anytime you're looking at analyzing a stock, keep that in mind that it's important to look at that business model and what the really upside potential is, and if their potential customers really need it. Not about them wanting it, do they need it? And for a lot of these restaurants, they do need it because you had to keep up with the guy next to you who was then being able to do deliveries and you aren't. You're literally leaving money on the table. So I thought that was pretty fascinating. And prior to that, on Tuesday, Andrew McDonald, an executive from Uber, spoke. And he has obviously Uber is pretty similar going out to consumer. They upended an industry, that being the taxi industry of shuttling people around the world. And they're in so many countries right now. And he came out and this is really really telling of the economy right now. People talk about the economy being so bad. Two things that prove it's not. One, and you can see the numbers already with Uber, and I believe that the gentleman that this summer will be the busiest ever for Uber as far as demand is concerned. And you're not going to be paying for Uber if you're waiting in line for bread. And, going into a deep recession like a lot of these crazy economists are calling for. So I don't see that happening, and then them Uber having the busiest summer, I think is really good for the economy. The problem that they have right now, it's not the demand for their services. The problem is the supply, and the supply here happens to be drivers. There's not enough drivers out there. And this goes back to the employment situation where there's a lot of people that don't want to work right now for whatever reason it might be. Maybe they're independently wealthy. Maybe they think they have enough money. Maybe they got a lot of checks from the government. Maybe they're just flat out lazy. Who knows? There's a lot of people that don't want to work right now. And speaking of working, there was another panel that I watched today. I can't remember who was on it, but they were talking about remote work. And the moderator asked in the beginning, how many people here would be upset or quit their job if they had to go back to work full time? And a lot of people cheered. It was a cheer. And probably a bit skewed in the crowd that I was in, a lot of tech people. So a lot of them work from home. They did work from home prior to the pandemic. So it's a little bit of a different crowd. But one of the gentlemen on stage made a great point. And what he said was, it's not for everybody because there's certain jobs you have to be there. If you're a server at a restaurant, you have to be there. If you're a bartender at a restaurant, you have to be there. If you do somebody's nails for a living, you have to be there. There's certain things you have to physically be there for. If you're making widgets and you got to pull a lever, you got to be there. If you're building a house, you got to be there. There's so many jobs that you don't have the luxury of working from home. Yeah, there are a lot of jobs that obviously you can work from home, but not everybody has that luxury. So keep that in mind because a lot of people say, well, with this great resignation, everybody's quitting, everybody's working from home, they don't go to the office. There's a lot of jobs that still you need to be in the office or the factory or the shop, or whatever it might be that you're running. You can't get your haircut virtually, folks. And I need a haircut. You can't get your haircut virtually. It just doesn't happen. So I thought that was pretty interesting. And one other thing on the economy, I took a picture. I was going to post it on Twitter. I just didn't get around to it yet. Walking back from the conference center and just looking up. And I noticed this. This is the first time I've been in Toronto since the pandemic, but I used to come all the time when I was in TV because I would do their Bloomberg TV up here used to be called BNN, Business News, and always noticed a lot of cranes here. But I looked up at one point, and it reminded me of being in Shanghai. The amount of cranes that are going up, and to live in Toronto is not cheap. It's really really pricey. So that tells me something as well. That tells me that again, you wouldn't see that as economy is crashing. We're going to a deep recession. So I don't care what the economists say or the so-called experts say. I like to use my eyes, I've always done that. It's the eye test. You talk about that in sports a lot. They may have an athlete that's coming out of college and be drafted, and he meets all the metrics as a linebacker: the size, the weight, the speed, the agilities, all that stuff. But then you have the eye test, and when he gets on the field, he's just not that good. And it can go the other way too. Somebody just doesn't have the good metrics on paper, but the eye test says, boy, he's one hell of a linebacker. So I use the eye test for the market many times. And right now, when I look outside, I see a lot. I see a lot of cranes, and I don't see that stopping anytime soon, folks. So those were two pretty interesting ones. Another one, Gary Kasparov, the chess player, the grandmaster chess guy from Russia, he was up there with another gentleman that was in cybersecurity, and they were talking about the Russia-Ukraine situation, kind of how it's affected the world and how it's going to continue to affect the world. And the one question that the moderator asked Kasparov was, when does Putin stop? And he knows Putin pretty well. He's been following him. He said, for 20 years, he basically has followed Putin pretty closely. And he was in Russia, and then he kind of spoke badly of Russia. Many people know his story. I'm not going to get into it, but he said his answer was he will not stop until he is stopped. And he said the one thing that Putin is he's a man of his word. He said, going back 7 or 8 years ago, he would come out and say, Ukraine is not a state. Ukraine is not considered a nation. And we will have to deal with them. And 7, 8 years later, they did, invade Ukraine. So, and I think about it more. I'm not an expert on Putin, but yeah, he's the kind of guy that if he says he's going to do something, he typically will, as crazy as it may sound. And Kasparov went on to say that the West should help Ukraine. So Putin does get stopped because otherwise he's going to keep moving on. And potentially Lithuania. There's some conflict right now with Lithuania, and that's a NATO country. Obviously, if he attacks Lithuania, you're attacking NATO, you attack every country in NATO, then we're going to see some serious bombing, in Russia, and we don't want to see another world war. So I don't hope that doesn't happen. I hope somehow we can stop him prior. And he went back to say if they stop him in Russia, or sorry, if they stop him in Ukraine, there is no more. Stop him there. So I think it's very important. Yeah, and they also talked about how the war is far from over. There's still a lot going on, a lot of high risk out there still. And then a big portion of this talk was cyber warfare, how people don't realize how the cyber warfare, what's been going on behind the scenes, has been crazy. They talked about a gang that was like built, a cyber ransomware gang that was built with a bunch of Ukrainians and Russians. And then when the war happened, they split and started attacking each other, which was good because they stopped attacking innocent people. Not that they're not innocent or are innocent, but they're going after each other instead of going after people that they would normally go after. A lot of people in the West. So this Russia-Ukraine situation, we've become a little numb to it because that's just how we work as humans, and it happens all the time. I saw it after 9/11. You see it after financial crises. You see it after disasters. You just become numb to the news because it's just constant. So it's not as I don't know, headline grabbing, I guess, doesn't get you so worked up as it did in the past. But I want to keep this in mind that still there is a conflict going on over there, and it could get worse. Another one I just saw Wednesday as well, which I found very fascinating. And this is an area that I've been doing research in already. But it's about supersonic flight. And, the last really commercial we had of supersonic flight was the Concorde, 20 some years ago. And the presenter was the head of a company called Boom, BOOM. And they're a jet maker for supersonic jets. And he had mentioned that the speed hasn't really doubled, or speed hasn't changed. I should say speed hasn't changed in about 60 years, and that's when we went from propeller to jet engines, and speed doubled. And he posed a question: of what if speed doubles again? And if it does double again, suddenly that flight from New York to LA goes from what, 6 hours, 5.5 hours to 2.5. Flight to London, same thing, 6 hours down to three, and makes travel around the world much, much more convenient. So that's something that could really happen. And then, I talk about often the convergence of different technologies coming together to allow these types of things to happen. When it comes to building these supersonic jets, the company, they showed a few things of them using artificial intelligence and the cloud to test out all these new plane concepts. And they can test it out through using the cloud, using all this information, the data out there, and using AI to run simulations to find out the best way to build these jets, which I thought is fascinating. I talk about that for years about how AI and data will change healthcare. And will change healthcare because we'll be able to, instead of taking 10 years for a potential drug to get approved, it could be done in maybe a year because we could run all these simulations with quantum computing, with AI, with the cloud. They also use AR, augmented reality, for pilots because the way, if you remember the Concorde, the nose went down like this because it has to go up very fast. And it's tough for the pilots to see. That's why the nose went down in the front of the Concorde. So when this takes off, this one has a normal nose coming out, but they have a screen that's AR that's basically showing what's behind there. And he was talking about how it's actually better than actually looking out. It's because it's perfectly clear. It's all mapped out. So again, taking in new technologies such as artificial or augmented reality, sorry, for the pilots to put into the plane. Another kicker for this and why so many people are really backing this, me included, is it's 100% compatible for what's called SAF, Sustainable Aviation Fuel. I've talked about SAF in the past briefly on a show, maybe 2 months ago or so. And there's a lot of people out there. United, obviously, we all know United, the airline. They plan to be 100% carbon neutral by 2050. Um, who else came out? The IATA, the International Air Transport Association, they pledged to reach net zero flying by 2050 as well. And right now, the airline industry, as you can imagine, is very much responsible for a lot of the carbon and emissions that go out there. Show you exactly where it is. The global aviation industry produces around 2.1% of all human induced CO2 emissions and accounts for about 12% of all transport induced emissions. So, this is a big change that you're going to see if this does happen going forward. And to give you an idea of timeline for Boom, they believe they'll have their first jet roll off the line about 2025, so about 3 years. 4 years from now, 2026, they'll be in the air testing it, but you have to have several years of testing. And they believe they'll have their first passengers by 2029, it's about 7 years from now. So it sounds like a long time, but as these companies and as the SAF companies that supply this move forward, you're going to see, a huge, huge demand. And this is when you see a lot of the big money being made. They give you an idea of the upside of SAF. The global demand for jet fuel, it's around 200 billion liters a year. But the IATA, which I just mentioned, the International Air Transport Association, estimated that in 2021, SAF accounted for about 100 million to 120 million liters. So that's about 0.05% of all the overall fuel. So simple math tells me I need to go up 20-fold just to get to 1%. And 20 times 100, you start getting into some big numbers here. So this is something where you're looking at huge upside potential. And I'm not saying every plane's going to run an SAF. We could have electric, we could have hydrogen, we could have a lot of other things out there that are helping this. But the one closest to right now to getting closer to that net zero is SAF. Hydrogen's down the road. I think that's possible as well. I think we're going to have battery technology next couple of decades, but be possible as well before 2050. So there will be other ways to do that. The thing is, though, what you have to keep in mind is it's one of many. I wouldn't say put all my money in SAF if I'm investing in planes and air travel, but that is one area in that basket I always talk about that you want to put some money. Another one that was interesting was yesterday was the Binance USA executive talking about cryptos. And there's another guy that was on there with him, or another woman, I should say, and they talked about how the term I heard a lot was crypto winter, which we're in right now. Obviously, the crypto pulling back down around just above 20,000. So this is definitely a big pullback from 69,000, obviously. Um, but a lot of people, they kept saying it's much more in trading. A lot of people get in for trading. I own Bitcoin because I believe it is a digital asset. I believe it's a digital um, store of value. I think it's digital gold, and I think there's still a huge upside potential. And you're going to have these crypto winters from time to time. I thought it was fascinating that Coinbase just laid off, I think it was 18% of their workforce. Meanwhile, the gentleman said Binance is actually hiring. And it gave a good reason as to why. They never allowed margin. They didn't give any loans or take any loans. So they didn't have that leverage. So they're still doing well. They've really been a spot trader, spot trading of cryptos for the most part. They're starting to expand that a little bit, but they've always basically been spot. And it made me think again of investing, in this turmoil, this upside down world that we have in some of the markets and in cryptos, come opportunities. And you think about what cryptos and what blockchain can do, and they reference how you can take anything really and make it faster, cheaper, and better with the blockchain or with cryptocurrencies. They also mentioned Asia is still the leader when it comes to cryptocurrencies. And one big thing that scares a lot of people that love cryptocurrencies and Bitcoin in particular is regulation. And they talked about this, and I agree. And I've talked about this in speeches I've given on cryptocurrencies is that regulation, a little bit of it won't be horrible because that regulation will bring some comfort to some of the bigger investors out there, maybe some of the older investors, some more risk adverse investors that have a ton of money, and that will allow them to get into the market. And that to me will be very, very big for the market. So I want to show you a chart here really quick. And this is a chart and of the last year. It looks a little messy, but the only thing I'm trying to show you here is this is the return in the last year of several equity related investments and Bitcoin. So let's start at the top. In the last year, Amazon down 36%, Bitcoin down 42. But looks what's done much worse than Bitcoin. Meta, Facebook down 52, Uber down 55, Netflix down 63, ARK Innovation ETF ARKK down 65. PayPal, one of the leaders in fintech, down almost 74%. So people are bashing Bitcoin, saying, "My God, it's over. It's pulled back so much." So are you telling me that you think PayPal's over? Do you think Meta is over? Do you think Uber's over? Do you think the ARK Innovation ETF is over? Well, some people may say yes to that. Amazon, only 6% better than Bitcoin. You think that's over? I think a lot of times we get so wrapped up in a thought process that we don't look at numbers. And I'm a numbers guy, and the numbers show me here exactly what I just said. It's a pullback. It's fine. It's a deep pullback, but we've had a deep pullback in a lot of things right here. All right. One more thing, then we'll talk about the markets. This is kind of my joke of the day, but it's serious because it's complete BS. Biden came out this week and said he's cutting the federal gas tax. It's about 18 cents per gallon. So the Wharton School at the University of Pennsylvania did a study, and this was back in March. And they said in March of 2022 through December of 2022, so 10 months, that they would lower average gasoline spending if they took away the federal gas tax between $16 and $47, depending on where you live. So we get to do some simple math here. That's between $1.60 and $4.70 a month. How the hell is that helping anybody? And it's going to cost tax revenue of $20 billion over that time. Trust me, I want less taxes. I'm not against lowering this tax or removing it for a tax holiday. But folks, when you hear this, it's not like all of a sudden the issue's solved. Between $1.60 and $4.70 a month, it's going to save you. What can you get for $1.60? I have no idea. $4.70, that's usually my tall latte at Starbucks. So saving you one coffee at the upper end of the level per month. And when I watch the press conference, which I very rarely, I just usually read the notes of press conferences of any politician, left or right or center, upside down. It was such a joke saying how this will immediately impact everybody. It's not. It's complete BS, folks. So don't believe everything you hear because that is complete BS. All right, so let's take a look at the markets here real quick. Take a look here at the S&P 500. This is as of Wednesday's close because doing a little early, got some travel on Thursday. But as you can see here, the S&P closed down less than 0.1%. This is the SPY's SPY down 31 cents. It was all over the board today. We gapped down big on the open on Wednesday, I should say. Gapped down big on the open on Wednesday. Then we actually rallied. We're actually up at a 5-day high, and then sold off towards the close and ended up, like I said, right around break even on the S&P 500. Similar to the NASDAQ, was down big, down 700 points, rallied back to positive and closed down about 0.2%. So the market's kind of in this no man's land. I think we're going to build a base down here for a little while. Could we retest the lows? Yeah. Could we hit new lows? Yeah, we could. But again, going to something like I'm at now in Collision up here in Toronto, you're around a lot of people. Some are negative, some are positive. But what you see is there's 35,000 people from over 100 countries that came here because they believe in innovation. They believe in the future. They believe in making the world better. And that to me is very, very fulfilling. It's very much a motivator for me. I love the optimism, and I believe, as I've said for many times, and I'll say forever, is that innovation will win out. These short-term recessions, these short-term bear markets, they hurt, they sting, they suck, they really do. But I will tell you, folks, over the long term, there's still a lot of things going on behind the scenes that nobody's talking about, and I hope that listening to this, you understand what I'm talking about. Innovation continues. I see it at these conferences. I see the deals getting done. It's not stopping anytime soon. So keep that in mind, please. Stay positive. And again, the markets could be choppy for a few more weeks, a couple more months. I don't know. I do know that there's great opportunities out there for long-term investors. If you're in a lot of those, hold on. If you have cash on the sidelines, get ready to do some buying because I think you're gonna have some great opportunities. But I have like my vice. I don't spend money on much, folks. But right outside the window here is a Saks Fifth Avenue. That is the one store I can go in and spend money. So I'm going to wrap the show right now. And I'm going to go spend some of my cash I'm sitting on and put it back into the Canadian economy for being so nice to me while I was here. So thank you so much, folks. I hope you have a great weekend. We'll be back Tuesday. Again, this was Making Money, and I'm Matt McCall.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.